Joining us on the show now is Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And what a strong start to the week where we are looking at almost all metals trading in the positive. So tangible commodities really seem to be back. And the reason is the decline in US dollar and expectations that US Fed perhaps will move for 25 basis points. With the kind of knee-jerk reaction that we've seen today, how do you look at the rest of the week panning out?
Well, good afternoon, Manisha. Yeah, that's a big question. I've got to take on board what you've just said, and that US dollar's come under a bit of pressure in the last matter of hours. Back there, and I've just made a note there around about 103.7 for that US dollar index. Everything's had a relatively nice bounce to the upside as far as energy and gold in the last few days, as we know. And base metals will probably take a little bit further lift up from here as well, I think, overall demand. So let's just see where we run over the next 24 to 48 hours. But some good news has come on board. Rishi Sunak saying everything's okay with UK and the HSBC situation with SVB. So that's all good news, Manisha.
Well, yes, the banking crisis is one thing to watch out for, but the street also seems to be looking at China now, where the peak construction season begins in the next quarter, and we also are expecting more stimulus measures come in from there.
Well, exactly right. So there'll be more increase as far as demand for hard commodities, as we know, base metals and so on that go into building. And you've come out of that winter period, you've put the Lunar New Year behind us, you've got very much an engaged internal structure in China. They want to really hit some numbers, and naturally they've just got to move quickly for that to happen. And a property sector that they're going to try and support us in any way possible. So I don't think they're going to allow any thoughts of failure. So it's all onward and upward, and plenty of mouths to feed over there, and plenty of demand, Manisha. So I think it's a good time for miners and so on.
Okay. The US non-farm payroll data is something that the markets have digested, and now we wait for the US CPI numbers that come in tomorrow. Yeah. Between all of this, as you said, these are perhaps good buying opportunities. So what kind of an upside, and what will you really watch out for?
Well, I've got to keep an eye on the CPI. Everyone's focused on that. That's really, front and centre. But I look at those NFP that came out Friday night, and I think it was a little bit of a surprise in my eyes anyway, 311,000 jobs, which was well above consensus. So that's a strong push. We've had a little bit of wage softness, Manisha, in that February period, as we all know, and we've just got to see where that CPI number drops. And, I don't want to go out there on a limb and say, right, it's going to be that, and you can be so far out. So let's just see the impact of it. It's a big week for data globally, and it's a dynamic week for trading.
Oh, it is a dynamic week for trade, and you wouldn't want to be short here because we've seen dollar index decline, which is quite unusual, by the way. So there's no risk, say, flight in dollar index. Rather, we've seen that happen in tangible commodities. So metal perhaps is the place to be, whether it's precious or industrial. Thank you so much, Peter, as always, for joining us.